And here to talk signals in the charts, Katie Stockton, a founder and managing partner for Fairleads Strategies. He's also a CNBC contributor. Morgan Stanley's Mike Wilson, Katie, is talking about some of the action in small caps being disappointing. And in his view, it could set up for a violent end stage of this bear market that we've been in. Do you see technical things that confirm what he's saying, that he sees fundamentally?
Well, the small cap weakness that we've seen is reflective of the market breadth, right? The breadth has been pretty terrible since early February. If you look at the percentage of S&P 500 stocks above their 50-day moving averages, it sits only around 23%, which is pretty remarkable considering that we've had 3 up weeks in March. The S&P 500 remains below its own 50-day moving average. We think that the relief rally is likely to fail. And along the lines of what Mike is saying, we do think that there needs to be a greater spike in the VIX or volatility. And that, of course, would be associated with another downdraft that perhaps is a bit more harrowing in terms of market sentiment and its impact there.
And we said that you talk about Bitcoin and crypto. Similar comments there? You think this relief rally is destined to fail as well?
You know, it's interesting that Bitcoin did confirm its breakout from the basing phase. So on the surface, Bitcoin is pretty interesting now from an intermediate term perspective. It's not something that we want to add exposure to at this time. It is short term extended. But now the support levels get ratcheted higher with the breakout that we've seen. So that former resistance around 25,200 becomes support going forward. So Bitcoin has certainly improved on its chart. The longer term setup is a bit more neutral, I would say. And I think it seems to be specific to what's happening in the bank sector. And naturally, we've seen major breakdowns in the banks, and we don't have any signs of downside exhaustion there yet. We have a lot of clients that are eager to pick up shares to try to leverage a counter trend move. But we think there's really sort of great risk to that because of the breakdowns that have occurred.
Wow. So it sounds like Bitcoin is your favorite asset here. That's the nicest thing you've said about anything in the past year. You
know, we like gold. Gold has a breakout of its own. It's a different type of chart. Yeah, so it's an uptrend. Yeah. And resistance for gold is around 2063.
Yeah.
Oil broke down below some support around 70, so that just affirms the downtrend that's been in place there for several months now. We had thought 70 would provide a floor. There is room for an oversold bounce, which should, of course, help the energy sector at least do a bit better over the next couple of weeks. So we're looking for an energy bounce.
Okay, I'm just looking at the clock, and I want to get in the 10-year because we were in an uptrend for yields. Has that uptrend been broken?
The uptrend's still intact based on our work, but we've been talking about a trading range there, and it seems to have unfolded. The support for 10-year yields is around 3.25, so it's not too far from that. It recently tested it. It did become so-called oversold near that level. So we're looking for an upward bias here, not dramatically so, but within the context of more of a neutral range. That neutral range you can see in Treasury bond ETFs like TLT, and that range to us marks improvement over what we saw last year. So it does make Treasuries even more attractive than equities if we were to see that downdraft and that VIX move up into the 30, sort of the mid-30 range.